Now, those nice people who've popped up on high streets across the country telling us how keen they are to lend us money are going to have to rub along on slightly smaller profits. The government is getting the financial regulator to put a cap on what they can charge. It's only a matter of weeks since the regulator wouldn't have any truck with the idea because it considered it very intrusive. People who've been stung by so-called payday loans, which pay interest of 365% or so, may be relieved. But they'll be less relieved to hear evidence we've gathered at Newsnight about the harm they can do to your chances of getting a mortgage. More than 180 mortgage brokers have told us they've had clients with payday loans turned down for a mortgage. Andy Verity reports.
The landlord rang my front door bell.
If you borrow a tenner from Wonga now, then next month you'll pay back more than 20 quid. You'll pay interest at 365%, more than 50 times the price of other loans. But that hasn't been enough to put off 2 million payday loan customers hungry for instant credit.
Money, money, honey. Money, honey.
The Wonga economy is one of the worst symbols we have of the cost of living crisis.
Labour's campaigned hard on payday loans. In May last year, a private member's bill to cap their cost won cross-party support, but government whips ensured it was voted down. Now, every party wants to be seen as the consumer champion. The coalition's told the Financial Conduct Authority to intervene in the market and regulate costs.
We're going to have a cap on the total cost of credit. We're looking at the whole package to look not just at the interest fee, but also the arrangement fees and the penalty fees. This is all about having a banking system that works for hard-working people, making sure that some of the outrageous fees you see and some of the absolutely unacceptable practices are dealt with, and it's all about the government being on the side of hard-working people.
So what are you working on here?
That surprised the industry because the Competition Commission and the Financial Conduct Authority were supposed to be working out whether a cap was needed or not. By introducing a cap, as they have in Australia, the government's made up its mind to intervene in a market without waiting for official advice.
If the objective is to drive out some rogue lenders, then that's certainly had some success in Australia. But what they've also seen there is they hasn't seen that it's driven down demand for loans, and so therefore people are looking for other forms of credit and being driven towards illegal lenders. And so that's something which obviously the government wants to be very wary of.
Capping the interest and the fees on payday loans should help some borrowers, but cost isn't the only way that payday loans can affect your financial future. Newsnight's discovered strong evidence to show that having a payday loan won't do you any good when you're trying to apply for a mortgage. Most lenders don't say publicly they'll turn down borrowers with payday loans, but the brokers who arrange half the country's mortgages are finding that with most lenders that's exactly what happens. Jonathan Clark recently advised a young couple wanting a help-to-buy mortgage who'd taken out multiple payday loans with Wonga.
I knew it was going to be a problem, but I was a bit shocked at the response I got, because apart from, one or two said they could be acceptable subject to credit score, which is a polite way of saying it probably won't work, but most of them were very negative and said it would be an instant decline. And that was regardless of their income, their conduct of their accounts and everything else. And
These were major lenders?
These were major high street lenders, yeah.
Nowhere do you say...
3 weeks ago, Newsnight asked the Chief Operating Officer of Wonga, Neil Voss, if he'd warned prospective customers on his website that payday loans could damage their chances of getting a mortgage.
We'll certainly have a look at that and I'll come back to you.
To find more evidence, we asked the trade publication Mortgage Strategy to ask its readers, the brokers, what the lenders have been telling them. 289 of them came back. Of those, 184, nearly two-thirds, had clients with payday loans turned down for a mortgage. When you take out a payday loan, it stays on your record for 6 years, so it can affect your mortgage application for that length of time. You would have thought customers who take out payday loans would want to know that before they take them out. Now, payday lenders pride themselves on their transparency, but do they say anything on their websites about that vitally important fact? I can't find anything. We put our evidence to the trade body that speaks for most payday lenders.
We certainly need to look at this more closely, and we've asked the Council of Mortgage Lenders if they can give us any insight, and also the main credit reference agencies. So that will help us to understand the issue, and then we can work together as an industry to address it more widely.
I think people would be very shocked if they knew that getting a payday loan now and paying it off immediately the next month afterwards could impact on their ability to get a mortgage 3, 4, 5 years in the future. I just don't think people are aware of it, and I think people should be aware of it.
No one likes nasty surprises.
We asked Wonga, that fun, transparent company, if they'd do what they said and come back to us. They declined. It's clear to mortgage brokers that most mortgage lenders see payday loans as a sign that financially you're not coping. That's known to the lenders, but not to thousands of young people who may still think that a payday loan won't harm their chances of buying their own home.
Well, now the Business Secretary, Vince Cable, is with us. A week or so ago, the regulator thought the sort of measure that you're proposing now would have been very intrusive. Why did you change your minds?
I don't think we ever thought it was very intrusive, because we've already given the power to the regulator to introduce loan capping. I mean, this is the latest step in a whole series of actions to regulate this industry. If you remember, the Office of Fair Trading did a report, as a result of which I think 25 companies in this industry left. We've now come forward with measures to regulate the advertising, the extent to which the lenders can go back to a person's account, and now we're introducing the cap on interest rates.
Is this your departmental responsibility?
It wasn't until recently, but it's now moved into the Financial Conduct Authority, which ultimately
Couldn't it be seen by many that this was your departmental responsibility until, what, about a week ago?
Yes, very recently. Yeah.
Right. And it had to be moved out of your department and into the hands of George Osborne before anyone did anything.
Oh, come. No, this move has been planned for 2 years. We introduced all the measures to regulate the industry, and it's cross-governmental agreement. I made it very clear that we needed to listen to some of the backbenchers who were putting down amendments in Parliament, engage with them, get more evidence, and as a result of the evidence that's recently come forward on the United States and Australia, that having a cap and interest rate is practical. So there was a cross-government approach.
But when it was in your department, it wasn't considered necessary to do anything.
We considered that there was a balance of risks. We commissioned a study from the University of Bristol that warned of some of the unintended consequences.
Well, thank heavens for George Osborne coming to the protection of the consumer, eh?
He has acted, on behalf of both of us, because we were concerned that the balance of evidence now suggests the merit of
what's happened between last week and this week?
Well,
apart from the fact he's got the gig and you've lost it.
Well, I'm less concerned about that than getting the right policy. What has happened over the last week? There is a lot of argument in Parliament about the merits of the cap. Various people like the Archbishop of Canterbury are making this case. We commissioned a study from Bristol which said that there were advantages and disadvantages in an interest rate cap. We were worried about the risks. We've looked at further evidence. A state like Florida, for example, has now found a way of looking not just interest rates, but at the various fees. The evidence that we were concerned about, that this might encourage what I've called the baseball bat brigade, I think if it's properly managed, doesn't have to happen. And looking at all the evidence, we've decided that there is merit in having a cap.
So the Archbishop of Canterbury swung the day, did he?
He certainly had an influence, and also...
And George Osborne listened.
We have all listened. And the
Did you have anything to do with this decision?
I was very much involved in it. I've been involved in it all the way through with Joe Swinson, who's a minister in my department.
But you couldn't do anything
We've done a
when you were in charge.
Well, we had already taken all the key steps to regulate the industry. As I'd go over them again if you like.
No, it's fine.
But there was the competition investigation, the move to regulate advertising, and the move to prevent companies abusing the payment system.
Let me ask you about what Andy Verity discovered in that piece you just saw with the mortgage brokers. Do you think it's fair that people endanger their chances of getting a mortgage simply because they've taken out a payday loan, whether they've had any difficulty repaying it or not?
Well, it isn't fair on the basis of the evidence you've just put forward. And now that the industry is being properly regulated, that should stop. And one of the key steps in the regulation is regulating advertising. So the advertising will require a company doing a payday loan to make it clear that borrowers have to seek debt advice, and if they seek debt advice, they will know the risk of imperiling their credit status.
Do you think they should have a health warning on them?
That is what will effectively happen now with the advertising.
Now, let's talk about the Co-op Bank. At the time that the co-op was being asked to take over the 631 branches of Lloyds, you were in favour of that?
I was in favour of the general principle of co-ops and mutuals having a bigger role in banking. There was no reason at the time to assume that it was invalid. I mean, if there had been any evidence of the kind of impropriety that's emerged, it would have come through the regulator, as a lot of people are now claiming they knew it was a can of worms all along, but I don't think anybody had said so at the time.
So you didn't know?
I didn't know, no, and I don't think anybody did know, and the Treasury that conducted the detailed discussion certainly wasn't aware of it.
Do you happen to know how many times the co-op had meetings with Treasury ministers?
Well, I think there were a fairly substantial number.
Oh, George Osborne said it was fewer than 30.
I think it was around about that number, but I'm not a Treasury Minister, I was not involved, but they were having detailed discussions, certainly.
So they were intimately involved in the decision?
Yes, and perfectly sensibly and rightly. There was a European Commission ruling that Lloyds Bank had to sell off some of its branches. The co-op put themselves forward as a potential bidder. Nobody, I think, had initially any reason to assume they couldn't handle it. They were a substantial branch network. Their reputation was good as far as anybody was aware. The discussions proceeded, and eventually it emerged they couldn't handle it.
So what we learn from that is that trying to lay all this off on the Labour Party is nonsense, really, because you guys were heavily involved in the whole project.
Well, I've never seen it as a party political issue. I mean, I'm not sure...
You may not.
Well, I've never seen it as a party political issue. As far as I was concerned, there is a general principle that, you know, the mutuals have an important role in banking. The Co-op Bank had a good reputation. Had there been irregularities that were noticed, they would have come through the regulator. As far as I'm aware, they didn't signal that at the stage that the conversation with the Treasury took place.
Fitzgerald, thanks.
Thank you.
Thank you.